Name is Aditya Iyer. I'm the co-founder of NeoTrader, and I'm really happy and excited to be doing this session on Heikin-Ashi charts today. Right? It's great to come back live today for all of you. And before I can begin, I would request you guys one thing. Please hit yes on the chat if you can hear my voice clearly, and please hit yes on the chat if you can see the video signal clearly, right? Yeah, I can see people have already started getting active on the chat. There's Harshad, Arjun Rao. Good to see you again, Arjun. Deepak Chhabria, hello sir, how are you? Yes. Jatin Patel, yes. Like karo, very good. Abhay, hi Abhay. Great. So great to see that all of you guys have come in. Rupesh Kumar says yes, thank you so much. So today so my idea of coming out today was to introduce to all of you this entire concept of Heikin-Ashi charts, right? I can promise you one thing, that we're going to be doing a series of lot of such sessions on specifically on Heikin-Ashi. Today is going to be the first of many more that are going to come. And in the first session today, I'm going to focus more on the basics of Heikin-Ashi based charting. All right. Now, that's great. Vetri is here. Abhay is here. Balu, Bharat Kumar, Aji. Nice. Shripati, nice to meet you too. Great. So now, I'll tell you one thing. Okay. Let's talk about charting, like charting in general. Okay. Why do we look at charts, right? We can just look at prices normally, no? We can just see what is open, close, high, low, सब हम लोग ऐसे ही देख सकते हैं. चार्ट की ज़रूरत क्यों है? The reason why we look at a chart is because we want to spot trends, right? We want to know what is the trend of a stock. We want to know we want to know which way the trend of the stock is can go, or which way the trend of the stock is going, for that matter, right? That is exactly why we end up seeing a trend. Hey Vivek, how are you? Nice. Shripati, okay. Gopal from Bangalore. Yes, and of course, like how Deepak says on the chat, we need to look at trends, because by riding the trends you can earn more profits. Yes, that is of course there, but first we need to know the basics. Okay, I'm going to be talking from the absolute basics, absolute fundamentals today, right? Because if we don't know the basics, we can't understand anything going ahead. Yes, and like I said, we actually look at a chart because we want to identify the trend in the stock. And broadly, there are three types of trends. There is an uptrend, right? There is a sideways trend like you're seeing over here, and then there is your downtrend, right? When you have an uptrend in a stock, right, it is you normally have higher tops and higher bottoms. When you have a sideways trend, right, you can, and when you have a downtrend, right, when you have a downtrend, you have like lower tops and lower bottoms, and when you have a sideways trend, you're seeing neither of those. As a trend investor or as a trend trader, you can always make more money in the market, and you can find much better opportunities in the market if you are either riding an uptrend by being long, or if you are sort of riding a downtrend by being short, right? That is where you can make maximum amount of gains in the stock market, when you sort of, when you go out there, you go and identify a trend correctly, and you ride that whole trend until it reverses. And once the trend has reversed, you exit and you identify the next trend correctly and you ride that too. All right. that is what all of us sort of are trying to do, like when we are trading, right? And for doing that, we are using candlestick charts, right? Or you're using a line chart. Now, the most commonly used chart by most people is your candlestick charts, right? There is nothing wrong with candlestick charts. It is the most popular tool in technical analysis, but it is noisy. What do I mean by noisy is that when you normally see a candlestick chart, you will see red, green, red, green, red, green, red, green. At times, it does not give you a very clear picture of a trend. So many times you have to sort of smoothen that out by adding a moving average or adding any other study to actually go out and sort of read that trend. Or you need to start going into higher time frames to sort of reduce the noise level, right? All of these things. So to solve that problem, there is this other Japanese charting technique called Heikin-Ashi. Now, what exactly does Heikin-Ashi mean? Heikin-Ashi, in its very basic sense, means average bar. Yeah. So basically, it is very similar to your candlestick chart. It's extremely similar to that, but the way it is calculated, and the way the open and high and low and all those things are calculated, the formulas are very different. All right. In today's session, I'm not going to be getting into the calculation of the candles and calculation of the formulas. It's a little bit complicated. Any of you, and a lot of that is already there if you just Google, right? We don't have time to get into all of those complications. But what I want to do is, I want to show you, right? Or I want to give some flavor to all of you guys on how you can actually use this entire concept of Heikin-Ashi based charting in your own stock market analysis, and how you can directly trade with that. I can tell you one thing, that it's a very effective and a very noiseless form of charting, and it is peculiar in the way it is constructed. It looks like a candlestick chart, but at the same time, it also, looks different. So let me actually show you how that works. All right. So here you have your normal candlestick chart, right? What you have here is your normal chart here. You can see, okay, let me go to a smaller time frame like hourly, right? You can see over here that red, green, all of this is there, right? It looks a certain way. But now, if I change this to an Heikin-Ashi chart, you can see that the way it looks is, completely different, right? It has a completely different look to it, right? Now, why does it have this completely different look? Because in the way it is calculated, because it uses something called an average bar, right? Our candlestick chart uses open, high, low, close. The Heikin-Ashi uses a set of averages, right? And it is really helpful in sort of actually going out there and identifying the trend in the market, right? And why do I say that it is very useful in going out and identifying the market trend? Because it is completely noiseless. What do I mean by noiseless? It has very little variations. Like if you see here, it'll either be like red, or it becomes green, or it'll be red, or it'll become green, and then it becomes red, and then it becomes green, right? So the noise level or the volatility level in these charts are very less. So it sort of gives you a very clear indication of, say, which way the stock or the market is going to move, or which way the trend is sort of shaping up. Now, why is all of this helpful? Because it reduces your confusion, right? When you're trading in the market, what is your biggest enemy? Confusion. If you're sort of confused about what to do while trading, right, it's very difficult to sort of push the button or take right decisions. But if you have something that is going to sort of reduce your level of confusion, it's really going to be helpful for you in your trading. And that is why I'm going to be showing you people in my next slide that why exactly should you be using and how you should read these particular Heikin-Ashi based charts, right? So as you can see, it is simple. When you actually have an Heikin-Ashi chart on your screen, you normally only have, say, 3 types of patterns. When you're doing candlesticks, you have many patterns, right? And many combinations, right? But while you're using Heiken Ashi, you broadly only have 3. You have green bodies, you have your red bodies, and you have small bodies, right? That is it. So you will sort of broadly only see these 3 patterns on your Heiken Ashi charts. And like, why should you really use all of these charts? Like, what is so special about these charts that you need to use it? I will explain that to you people now. The first thing is definitely the colors, right? So, like, why do I say colors? If I go back to my older chart, I can see here that in this zone the downtrend is very clear, right? Over here I can see that the uptrend is very clear. Again over here I can see that the downtrend is very clear. Here uptrend, downtrend, up down, up down, up down. It is and here this big downtrend, right? So if I do the same thing in a candlestick chart, you can see that it is much more noisier, right? So the first thing that it does is that it sort of gives me a very clear indication, and I'm able to get successive red or successive green candles. And secondly, it is sort of reducing my overall noise, right? So that is exactly why you should be using this particular form of charting, because it is going to be giving you a much more clear view of what is happening in the markets. All right. Okay. Now, one second, guys. Yes. Now, I'm going to be next. What I'm going to be showing you is that I'm going to be showing you a particular guidelines that are going to be very peculiar to this form of charting. So please pay attention to these guidelines. Okay. The first thing is the green candles. Okay. So normally when you are looking at the chart, when you have green candles, it should be having very small or absolutely no lower shadows. That is the most bullish scenario. Next, the most bearish scenario is when you have a lot of red candlesticks without any upper shadows, right? And the third scenario is when you have large upper and large lower shadows, like you have your like dojis and spinning tops. Okay, so these are the 3 scenarios that you will be sort of met with, and it is very important to sort of know all of these guidelines properly. So I would request all of you to either take a pen and paper and note this thing down right now, or you can take a screenshot of my slide. I'll keep it on for another minute or so, but definitely I want all of you people to sort of note this down. What I'm going to be doing next is I'm going to be showing you a few charts, and I'm going to be showing you how exactly you can spot an uptrend, downtrend, and a sideways trend using this particular guideline. All right. Let me move to the next slide now. And what do I see here? The first guideline that we saw, right? It said that there should be absolutely no or very small lower shadows and many green candles to have an uptrend, right? So if I see here, I can see here that small body, small body, small body, and I see that all the lower shadows have started disappearing, yeah, and it is moving higher uptrend, and again I started seeing some lower shadows here. So I find that the uptrend has taken a pause. Again I see there are green shadows, green candles here, and all of the lower shadows have disappeared, and I can find that the uptrend is resuming, right? So that is what you want to see. You want to see consecutive green candles with very small or no lower shadows, right? Let me move to the next one, and I can see something similar here as well. I can see consecutive green candles here, 1 2 3 4 5 6 7. The uptrend was on. I saw that a lower shadow came, so it's a point of indecision, right? But again I see that the uptrend started continuing, and again here we have some points of indecision again, and again I find that the uptrend is rising. And as long as if you see this chart very closely, you will find that as long as there was no lower shadow on the chart, your uptrend was very strong, and the moment you started seeing some upper and lower shadows on the chart, it is a early indication that the trend is going into some sort of consolidation. And then when you start seeing red candles and lower shadows come, it is a sign that the trend has changed or the trend has reversed, right? So these are the 4 stages in which you will find the next chart. I can see the same thing. I can see here that although it is in an uptrend, I find many upper and lower shadows on the chart. It is not a very clean and clear uptrend, and that is exactly why it goes ahead and it reaches an end, right? So that is what so that is the basics. So please take note of those 3 rules and go back to your Heikin-Ashi chart and plot it. You can plot this on any particular charting platform or any software. I was using TradingView. You can do it in TradingView or any of your broker, whatever charting package they give. All of them will give you this form of charting. All you need to do is you will have to go somewhere in your settings and change the settings from your traditional candlestick to this one, and your work will be done. All right. Okay, so I hope all of you all are with me. Okay, I hope all of you all have understood what I have told you so far. If you guys are with me and if you guys have sort of picked up all of what I've told so far, please write yes on the chat. Please write a yes on that chat, ladies and gentlemen, if you have sort of picked up all of what I have told you as of now. Let me see what I'm getting on the chat. Yes, come on guys. Okay, nice. Okay, all of you people who are here, whatever questions you have, right? Towards the end, I'm going to be keeping some time out and I'm going to be doing a question and answer session, and in that question and answer session, I'm going to be answering all of your queries. All right, I can see that Arjun Rao says yes, and Vaibhav Shah says yes, Somya Julu says yes, Rupesh, Keshavan, Balu, Like Bharat Kumar is asking whether this can be applied to index. Yes, it can be applied to all charts, Nifty, Bank Nifty, stocks, everything, right? Like Dinesh is saying yes. Okay, that is great. That is great. Nice. It is good that you people have been with me so far, because what I'm going to show right now and what I'm going to be covering next is actually the practical application of these 4 Heiken Ashi charts, right? I'm going to explain now 4 very important concepts that you need to know if you are going to be using this form of charting, right? Today I'm only going to be explaining the concepts, right? Maybe in the next video and in the next session we will actually open up the charts and see a lot of live examples, right? So in the future definitely we'll be doing we'll be seeing a lot of these things happen live, but today please pay attention to what the concept is. All right, so now, as I told you earlier, right, when you are seeing candlestick patterns, right, you have so many patterns: doji, shooting star, hanging man, 3 white crows, 3 white soldiers, 3 black crows, right? So many of them, right? Unending, morning star, evening star, everything, right? But when you are looking at Heikin-Ashi, there are only 3 patterns, right? And it can be extended into a 4th one. First thing is like long body, medium body, small body. That's it. 3 ही है pattern इसमें. Like I showed you in the earlier one, like I showed you in the earlier slide, right? So first thing that we need to understand is something called a new trend, and a reversal. Okay. Now, new trend and reversal are more or less self-explanatory, right? Like what is new trend? A new trend is where in a stock or in an index or in any asset class, the it is like moving one way and sort of a new trend is formed, like, and it is an opportunity for all of us to sort of enter that trend and participate in that trend, right? Now, how do you spot a new trend when you are seeing an Heikin-Ashi chart? It is very simple. It is super duper easy. Like you will either have a set of greens and you will see that a red has come, or you will have a set of reds and you will see that a green has come. All right. So let me show you how that actually, how that will actually look in your chart. So let us go and see some examples, right? Let us go here and see. Okay, ladies and gentlemen, please confirm if you can see my chart, right? I hope all of you can see the chart. If you can see the chart, please hit yes on the chat. Okay. And I'm going to be asking all of you. Okay. Bharat Kumar says yes. Abhay says yes. Okay. So let us go now to weekly. So basically, like over here, you can see is a new trend? No, right? I'm going to be putting the names of some stocks, and we are going to see whether we are finding a new trend or no. Yes, like here we can see that Apollo tire. Okay, it was in an uptrend, right? This whole thing over here on Apollo tire was like an uptrend, and after that it started moving sideways and it started falling down, and here we started getting successive green candles, right? When we start getting successive green candles here, that is a beginning of a new trend, right? So So normally when something is red and it ends, right, and suddenly we start seeing 2 3 green, right, that is an indication that a new trend is formed, right. And now when a new trend is formed, two things can happen, right. We can have two things: either the trend can be confirmed, right, or the trend can continue, right. So now when a new trend is formed and when you start having like long body candles in the beginning, that is a indication of trend confirmation. And when a new trend is formed and when you start having like normal candles, it is a sort of indication that the trend is continuing, but you will need to start seeing some long body candles to actually sort of conclude that that particular trend is confirmed, right. So how do you see that on the chart? Let me show you. Okay, in between green there are some red candles. Okay, so normally, okay, let me show you what is a confirmed trend. So let us have a look at Berger paints. All right, like here you can see that. Okay, Berger paints was in an uptrend, then it started falling down. It sort of reversed. Then you saw these small body candles here, and we've got 1 2 3 4 really like large body red candles. This is a indication that the downtrend is being confirmed in Berger, and we can see some more sort of bearishness. So all of you people, if any of you are holding sort of we are on the weekly chart, if any of you are sort of holding Berger paints in your portfolio, you should start being a little careful. All right, now let's look at Manappuram. Same thing. All right, I can see here it was in a downtrend, right. It paused here, and we started seeing some all body candles here. It reversed, we got some 1 2 3 red bodies, and then we got some really big like red candles. That is another indication that the downtrend is in a confirmation spot in Manappuram, right. So if can we see something in a smaller time frame chart as well? We can. We saw some bearish candidates. We can have a look at some bullish candidates as well. Let me write Abbott India and let me go to 30 minutes, right, over here. So in our 30-minute chart, if you see that Abbott India was going like up and down, but it was largely sideways, and now after this fall we've got like 1 2 3 green candles, right, and then we've got 3 large green candles, right. So that is another indication that the uptrend, right, you know the change of trend in Abbott is confirmed. All right, okay. Jatin Patel, it can be used in index. Like yes, it can be used in the index as well. Yeah, you can use it on your Nifty as well. All you need to do is you need to put Nifty here, and you will see that you can see all of these things even on the Nifty. Like for example, let me show you that we were at 16. This is a 30-minute chart. I can do it on the weekly chart. I can even do it on the daily chart. We can see that if I put the weekly chart of Nifty, I saw that in March of 2020 we had this huge fall, right? And like once we had this huge fall, we started seeing a recovery here, and until about May of 2020 we did not see too much of movement. But then from June of 2020 was when the uptrend actually began, because as I explained earlier, we should have successive green candles with very low or absolutely no lower shadows, and as you saw here, there was absolutely no lower shadows here and a consecutive movement of greens, and we started seeing small body candles again. That is an indication of consolidation, and again we saw successive greens with absolutely no lower shadows. Same thing happened here. The moment shadows appeared, it started getting small, and and over here we started seeing green again, with absolutely no shadows, and we are in a phase of consolidation again, right? So the thing that you people should keep in mind is that the 3 rules. I'm going to be showing you these rules again because it is very important over here. Here it is. Green candles without lower shadow is bullish. Red candlesticks without an upper shadow is bearish, and dojis with substantial upper and lower shadows is something that is neutral. All right. So so what you guys need to do, right? What you guys need to do is you guys need to sort of put this thing on the chart and keep sort of practicing that, and keep seeing it. Now Arjun is asking me at what level you need to take entry and exit. See, entry and exit will come later. The first thing that I want all of you people to do now is to start getting used to doing this. Start getting used to seeing charts in this way, and start reading the trends first. And once you people have gotten a hang of reading the trend, we'll be doing many more successive sessions, right, later on, where we're actually going to go and see how you can take trades using this, and sort of actually go and see how you can also invest using this particular concept. All right, so let us see another example. Let me put Dr. Lal Path Labs, right? Let us go to the stock Dr. Lal. Let's just write Lal. Here it is. Okay, now what do I see here? What I see here is that Dr. Lal Path Labs is in a downtrend. I'm seeing successive red candles on weekly. All right, I'm going to be showing you something very interesting now, that from weekly I'm going to change now to daily, right? And the moment I change to daily, now what do I see? I see that we have found a reversal, right? So Dr. Lal, which was in a downtrend in weekly, has actually shown a minor reversal on daily. Now tomorrow, if I see from here, if I have tomorrow and not tomorrow, but maybe Monday and Tuesday, if you start seeing some long body green candles here in the stock, it is a sort of indication for you guys that you can look for a reversal trade in Lal Path Labs, right? And how will you take the targets and stop losses and all of those things, we will see later. But this is the way you need to sort of do it. All right, I'm just going to go to the chat now and read some of the questions that are coming in. Okay. See, Suresh is asking me the fundamental difference between regular candlesticks and Heikin-Ashi candlesticks. Please highlight 1 second. See, Suresh and everyone else, the fundamental difference is in the noise level. That is what the fundamental difference is. When you're looking at this type of charting, you are actually cutting down on your noise, right? And as long as you start cutting down on your noise and you make your charting more and more noiseless, it'll reduce the confusion and increase your clarity. In terms of formulas, in terms of the way it is constructed, you have lots and lots of differences. Like, you can go into all of those formulas and see it. Like, for example, if you see, like, a midpoint of each candle, right, is the open for the next day. Like, in your normal candlestick chart, the opening price of the next day is like the open, right, of that next candle. But when you're seeing this type of charting, the midpoint of the previous day's candle is always the open of the next day. Midpoint of this is the open of this. Midpoint of this is like the open of this candle. So there are various, technical differences. I don't really want to go into all of those technicalities right now, because honestly, it is not that vital right now. What sort of really matters more is, one, having a clarity on which way the trend is going. Two is going and identifying stocks like this, stocks like this, stocks like Lal Patlab, where the trend is about to reverse or the trend is about to change. And three is to know whether the trend is going to continue, right, or the trend is confirmed and the stock is going to move higher. If tomorrow, say in Lal Patlabs, if we are having like a normal 2-3 normal green candles, we will be like, okay, the trend is continuing, but it is not yet confirmed. If we have like some if we have some big long body candles here, it is a indication that the trend has confirmed. So all of these things that we need to do first. Yes, you can definitely use it for your index option trading as well. Like later on, I'm definitely going to be doing a video also on how you guys can specifically use this whole concept, even more in all types of trading, right? See, because like one thing, even when you're sort of trading on the index, right, and when you're doing options, you need to get a gauge of the direction of the stock or the direction of the index, right? And if you're getting an idea very clearly of which way the direction is going, you can very easily use it in index. You can very easily use it in options also, right? You can use it for both option buying and option selling as well. So all of these things, and mainly you can use it for mainly for investment. See, all of you people, I know that like many of you people are doing like long-term investing in stocks. Say you've sort of bought a stock and kept it in your portfolio, all right? And you want to hold this stock for long term, and you have say 10 or 15 stocks in your portfolio. Like a very simple thing that you can do is, you can go to the monthly chart, right? You can go and choose Heikin-Ashi and you can go to the monthly chart, and as long as you're seeing that at the end of the month, you're seeing successive greens and you're seeing very small lower shadows, you can keep holding that stock in your portfolio. Like a moment, something like this comes, you will see that, okay, there is some consolidation or something does not look right. You can always put a trend line like this over here, and you can place a trailing stop loss over here, right? And the moment you start seeing like red candles with no upper shadows, you can exit your investment, right? So all of these things you can do. Can we apply indicators? See, you can apply indicators, but please do understand the calculation of those indicators will be different, all right? Because the same moving average will have a different value and a different calculation in your traditional charts, and it will show a different calculation here. So if you are using indicators, you should be sort of aware of all of these things, all right? And of course, yes, definitely you can use indicators with this. Yeah. Like similarly, like if I say, if you're holding any stock in your long-term portfolio, it's a very simple and a very easy thing to do. Like for example, IT stocks. I know that many of you guys were holding IT stocks, and the first thing that people ask is that, oh, I'm holding IT stocks for very long, what do I do, right? It was simple. Like over here, you kept holding, you kept holding this all along, right? And the moment you started seeing these upper and like lower shadows, that was an indication for you saying that the market or that stock is going into a consolidation mode, right? The moment something goes into consolidation mode, you need to start getting very alert, right? And all you need to do is you just sort of go here and you can see all of these shadows, right? You just draw a simple trend line like this, right? Which is like more or less encompassing most of the bodies and most of these lower shadows. And the moment that trend line gets broken, you can exit and you can enter again when you see signs of a new trend. Like how will you see signs of a new trend? When this red becomes green and you see and you start seeing some successive green bodies. So you can use this very simple technique if you are investing. At the same time, you can use this same technique even when you are sort of looking at your 5 or 15-minute chart. Even in your 5 and even in your 15-minute chart, even in your 30-minute chart, you can apply all of these techniques. So it is very versatile and it is completely noiseless. All right. So that is what I wanted to come out and show to all of you people today. I'm putting these things again. Please take a screenshot of this. It is like very important. I want all of you people now to do two things. Take a screenshot of this and note this particular thing down. And please, if you felt that what I showed you today was useful, right? Please hit the like button. All right. And please subscribe to our particular YouTube channel, because every day we are coming up with new videos, and today's session was like a very basic session, right? But going ahead, we are going to be coming up with many more interesting sessions and many more like live trading sessions also. So definitely subscribe to our channel and stay connected with us. And I will definitely be very happy to be interacting with you guys again in the next video. All right. So please go out there and hit the like button, right? And in case any of you have any more doubts, I can take maybe 1 or 2 questions more before we can wind up today. All right. And till then, in the meantime, let me see how many of you are going and hitting that like button. All right. So here is my phone, and let me go and see what is happening. All right. Okay, guys. So I can see that there are 47 people who are watching, and I have only 28 likes. So please hit that like button and take it up to 50. Okay. I need 50 likes before this video ends. What about tomorrow? Yes, we will be, don't worry, all of you people, we'll be dropping an announcement on the group about all the sessions that we'll be doing tomorrow and next week. So you can also follow us on our Telegram group, and people who are part of our various WhatsApp groups. You can keep your eye on that, and definitely you will be sort of updated on all the new things and all the new videos and the schedules of all our webinars and also these YouTube live sessions. But the best thing for all of you guys to do would be to go and subscribe to this particular channel, because the moment you subscribe, you will start getting push notifications on your phone every time we upload a new video or every time we sort of come live, right? So subscribe and hit that bell icon, and also like this particular video. All right, guys. Abhay says excellent session. Thank you so much, Abhay. Thank you so much, Srinivas, Jatin, Arjun, Suresh, Ravindra. all of you people, Vivek, yeah, all of you people who came online. And I think I'm going to be like signing off now, and I'll be seeing you people again in my next session. Till then, have a great day ahead, have a wonderful weekend ahead, and have a awesome next week of trading. All right, my name is Aditya Iyer. I'm the co-founder of NeoTrader, and I'm signing off, and I will see you soon. Bye.